สวัสดีครับ Today we're going to talk about a strategy very widely known called the PEAD. We can see many quarterly reports, earning announcement. How do they do it? How do they actually trade and earn from earnings reports, surprises? How do they do it? Today we're going to talk about the theory behind it, how they do it, what are some examples, what are the risk management of playing earnings call. And we can see many examples like this. นะครับ Okay, let's go through it ครับ Let's begin. Okay ครับ So in earnings play, after earnings announcement, there are usually two cases after a positive announcement result from earnings, like this and like this. Let's start with the first case first. In the first case, we can see the earning quarter 3 reports here, right? After quarter 3 report, price of, for example, maybe CPO rise 5%. Then suddenly after the day of earnings surprise report, 1 week, 1 month later, it went down back to where it originated. However, in another case, in case 2, it's a different scenario here. In quarterly reports, price went up 5% like the case 1. However, in this scenario, we can see price continue to surge up throughout the month. Later. Today we're going to explore how can we become a position in this case and not like this one. How do we catch this trend and not this one? No, we want to catch this one. And the reaction after the post earnings, this and this, the report here and here, it's called the PEAD. All post earning announcement drift, which is the movement after the earnings call. And this is actually explained by, for example, a stock in Nasdaq, right? Nvidia. Maybe people in Thailand is still sleeping. When announcement announced, only US people have known the news, right? But Thai people are still sleeping. When Thai people wake up, they start panic and buy. And this is like, for example, how this earnings play works. And let's continue to how it works furthermore.
Now we'll be looking at what to look at for a stock in case for PEAD. So the first thing that we need to look at is earning breakout that is above the analyst estimate. So normally before each quarter announcement, analysts will be predicting the revenue or even the net profit of those stock. And if the stock is able to perform beyond that expectation, PEAD will start existing where the stock price will suddenly jump. The second consideration that we'll be taking into account is the company growth rate. So even though the company is able to perform well for that quarter, but if the company do have low expectation for growth, then the PEAD will suddenly come back to normal after a few weeks. After looking at the company, we also need to look at the sector, whether the sector that the company is in is growing or is not growing. For example, the case study of CP that my friend have mentioned about, CP is in the FMCG industry and it have a very low and mature growth rate. After a certain time, the stock price will be declining back to normal. And lastly is the earning acceleration in the subsequent quarter. After the first quarter that the company is able to perform well and set expectation, we also need to look at the past and set expectation for the future, whether the momentum can carry on and actually bring the stock price up or not. Now we're understanding why PEAD exists. So there are 3 key considerations to look at in this pyramid. First is investor psychology. After the earning announcement, investors usually take some time to confirm the information with analysts before actually investing in the stock. Now moving on to the institutional momentum, where we take into account how company takes some time before they actually invest money in the stock to carry the momentum on because of the compliances and regulation that they have to take into consideration. And lastly is market inefficient. Because market isn't efficient, it takes some time for the information to reflect the correct price for that stock, and also investor can also influence the stock price.
Okay, let's start. Just to learn, but we also apply in a powerful way. So today I'm going to present a case study on Nvidia, and I will choose these 2 quarters because it have a back-to-back beat and raise sequence, which is one of the strongest setup for PEAD. So let's look at the first quarters. On February 21, 2024, which is the fiscal year's quarter 4 of 2024 for Nvidia. And as you can see that the revenue is 22.1 billion, which beat the expectation by 8.4%. And the EPS is 4.93, which beat the expectation by 12.3%. And this is the proof of concept that the AI data centers is real and now is exploding. Let's look to the second quarters. The second quarters, the revenue is 26 billions, which they beat the expectation by 5.8%, and the EPS is 6.12, which beat the expectation by 9.2%. And this is the proof of durability, that not only it is real, but it also accelerating, and it will bring the revenue to the investor in the futures. And that two straight beat and raise create two peaks in a row. And each trigger the analyst to upgrade their funds. They didn't just beat the market, they reset the expectation twice for the investor to expect the revenue in the future to be growth, and this create the expectation to be higher and higher and higher in just 3 months.
Okay, next we are going to talk about the risk management. First, we should know exactly when we will exit. If we are not, we might enter the black hole where we don't know where should we go or when should we exit. First thing to consider is overreaction and reversion. After earning announcement, the stock price might go very high, like exceed the certain point. But after that, because it's just an overreaction, the price might stabilize and go to the certain level. The next thing to consider is liquidity risk. Because in PEAD strategy, we usually trade in small to medium cap stock, which might be illiquid. So we should consider the risk where we might face the lower circuit, where we might not be able to sell further, like in this case. The next thing to consider is the weak market trend. Even though according to PEAD, we might assume that the price will go higher, higher and higher. But the market trend, for example, maybe there is a recession, so the stock price might just go sideways and going nowhere. The last one is the one-time surprise. The company might just sell an asset or just acquire something, but it might not be as sustainable. So maybe after the announcement, the stock price might just go up, but then what after that? It's just a one-time surprise. So the stock might just go down after that. Okay, so we know how to manage the risk. We should answer this question, like when will we exit? What is our maximum loss and what could go wrong? If we can answer those questions, we can earn enormous profit, but we should consider those risks.
To sum up everything, what is PEAD? PEAD shows that after a big surprising earnings call, price is not actually adjusted to its real value yet. Right? For example, if Nvidia price was before $50, after the earnings call, its real value might go to $70, right? But in reality, price is not instantly moves up to $70. It moves continuously to its point in a delayed timeline. So what we can do here with PEAD, we can actually enter when instantly after a big, huge positive earnings call, before other people who may be sleeping or maybe analyzing if Nvidia is actually good or not, or the stock is good or not. So we can actually go here before any other investors comes, and then we play from where other investors who have not yet come later in the future. And this is all about PEAD in short. So that is it. And I hope you all like our content that we are posting. And thank you very much. Thank you. ขอบคุณครับ